And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, looking at the charts, talking economic data, discussing corporate news items that are in the news that day, earnings reports, pretty much anything relevant and important to the markets that we think we can break it down, analyze it, give you guys some better insight so you can run your daily routines out there. Welcome back to our community. And community is the right word here. We got a couple of coaches here today to join us. Hashtag Team Tackle right in the chat as you pop on in here. And, as always, it helps us get the word out for these shows and all of tackle trading in general. If you give us that thumbs up, subscribe if you're brand new to the channel, and click that bell to come back and join us on a daily basis. Let's start with Coach Tyler and Coach Greg here. Greg, you first, actually. How you doing today, sir?
I'm doing fantastic. Thanks for asking.
I understand, because we were just talking about it for half an hour. We had a very fantastic Trade Masters event. And Tyler, you did bring home the title last night. Is that correct?
Yeah, I mean, since you brought it up, yeah, Tim, I actually did.
Greg, you feel like you're robbed? Is that what I heard?
Well, let's just say
I haven't seen the tape. So
let's just say I'm pretty sure 4 out of my 5 picks are killing it today. So just saying,
Well, here's the reality. I mean, it's a fun event. Obviously, the real winners are anybody who shows up and attends, because they get great analysis from 2 different coaches, 10 different trading setups and picks. I hear there were some really, really good setups. Maybe you guys can show me a couple of them. Like, give me 1 or 2 of them. Greg, what was your favorite one from last night that you did?
CI, the breakout on Sigma there was fantastic. A 250 price level there. Breakout made a call for the bull call spread there. It just was setting up perfectly. You actually got that close above the level yesterday, and then today she just took off like a rocket ship. So just a trade I really liked, technically speaking.
So that is a beautiful trade setup, and is confirming here today. And the healthcare sector is running as well. So that's a great one. But Tyler, you were the champ. What was one of your picks from last night?
What? Look, Greg's anxious. Like, his picks took off today. Mine are like, all right, let the loser run a little. We're just going to chill. Mine are lurking. All right. They're lying in wait here. You just wait. Target was one of them.
Okay.
A little high base pattern.
Well, trader doesn't get to determine when something confirms. I definitely see that. That's a beautiful tight consolidation up on the top end of the range. A couple of great examples. I'm gonna watch a recording after we're done with the show here today. I always do that on Thursdays when I get a few minutes to go through it. I love the show. I have a lot of fun with it. Glad you guys could be there last night, and I'll see if I agree with the judges or not, Greg. But it looks like from those first 2, it looks like you have the upper hand here in performance, at least for one day. So
I guarantee, even if you didn't like the picks, you had to like the jokes. I had Tyler laughing last night too.
He had some good jokes.
Did he have some good jokes? It's a fun show. All right, I'll go watch the replay. By the way, if you've not seen it yet, it will be on the front page of our YouTube channel, Trade Masters. We do it each and every Wednesday. But let's get into today's show, if I can get that out. Start talking markets again. Tyler, we had one hesitation, red candle up at the very top end of the range. Even whatever they called a sell-off there yesterday literally didn't even come below the previous candlestick. So here we are, beautiful trend. We're range up. Today we had some really strong retail sales data. We had a really good unemployment report. I'll go through some of those numbers a little bit later. The backdrop of strong economic data and strong earnings is continuing to push this market higher. Every news source I go to seems to have analysts calling for a pullback, but the market doesn't want to do it. What's your read on this condition right now?
We're never pulling back again. Those bozos saw a red candle. They thought we were going down. No, sir. Strong like bull here. Dude, I feel like, well, I mean, look, I was quite bullish at the beginning of the show yesterday, and then we came back down a little bit. Maybe I shouldn't crow as much, but dang, Gina, I mean, we're up 1%. This is a good move. This is a very strong trend. I like this market. I just want to go back 3 weeks ago and buy a whole bunch of new stuff, right? And that's good. I like that this market is the only kind of regret in this market is that you didn't buy more. And if that's the worst thing you can say, then you gotta be pleased with the performance, I think.
Mm-hmm. Greg, what about you? What's your take on just broad technical analysis, market conditions before Tyler starts breaking down the detail?
Yeah, it's bullish until further notice, really. I'd love to make the case that it's a little bit overextended, but really, markets can go further and faster than we believe, and it just seems to be meandering in that direction. So As you said, there's really not even been a pause in the last, 5, 10, probably 15 sessions there. Like a couple of red candles that did not like nothing burgers, and just moving. So, like I said, I'd love to say that we're a little bit overextended, but it's just cruising, right? It's, you got the car on the, I-95 there, you got the cruise set at 85 and you're just clipping along. So.
And here we are at an all-time high. I mean, it's been easy to write that headline over the last couple of weeks. Stock market hits an all-time high. Stock market hits an all-time high. I mean, it's doing it. It's like Groundhog Day each and every day. Here we are pushing higher. And some of this strength is on those corporate earnings reports we've seen the last couple of days. A lot of that, we were talking about being priced in, and we're not seeing, incredible price responses from many of the companies, but is providing a nice little backdrop to the overall conditions behind the market. But really, some of that economic data today was really good, really strong, like we've seen for several months now, and every economist has been indicating as well. We'll talk those when we're getting into the dollar. Tyler, can you give me a rundown of all four of the indexes like we always do? Just kind of take a look at them. Tell me what you're seeing from a relative strength, weakness, trend perspective. You got it.
Yeah. So if we take a look at the Nasdaq, this was the weakest yesterday, right? Tech stocks got punched in the face. I think you got to be impressed by how rapidly this thing snapped back. All of yesterday's losses have been recovered, and this is a continuation of the advance that we saw since we broke out 13,300. Tech looks great to me. Again, what's interesting about this is from a trading perspective, you wouldn't have minded a couple of red bars. It would have given you a better entry point, but this is like a market where if you want in on the index level, you just have to plug your nose and buy, it seems like. Main story for me on the Nasdaq is just how well it bounced back from yesterday's down move. I think impressive. Anytime buyers emerge and come back that fast, it's indicative of just how much optimism and excitement there is with stocks right now.
Yeah, and as I'm looking at the heat map, obviously tech is having a nice day. Healthcare is also having a beautiful day. There's several sectors I want to look at here in just a minute. Greg, the Nasdaq had been underperforming there for a bit. It came back into these lower pivot kind of consolidations, but the second that it put in that higher pivot low, like Tyler has, I love those lines, like we always say when we're looking at charts like this. I love those lines, but when it put in that higher pivot low, we started talking about on the halftime report. Coach Matt was detailing that he was watching and waiting for that breakout. We caught the breakout. Now we've been running where the S&P's been up 15 days in a row. This one's only been up, maybe 8 days in a row, but some really good, strong price performance. Greg, what's your read on the Nasdaq here and tech in general?
Yeah, it's roared back, right? Like it was pretty, when the other, the S&P 500, the other markets were doing okay, tech was really struggling there, a month or two ago. And it just was lagging so much, but almost like a slingshot, it's back up again. I like the volume pattern too, right? You look at the volume on the recent upswing and it's very average. It's just, you know what I mean? Like there's no, it doesn't seem to be getting out of hand or anything like that. It's just a nice little creep up. But, the slingshot effect of what we had when it did break out was pretty impressive. And, as Tyler, I think probably said it best, you just hold your nose and buy, you know what I mean? And ride the wave, which is what we tend to do as traders. So.
Well, I can understand to hold your nose and buy in some sectors. I actually think the Nasdaq still has tons of room for potential, and part of that read from me is on the weekly chart. If you go back to the long term, because as you kind of see the overall process and consolidation, I mean, we just broke out of a what is it, 6-week little resting period there, Tyler, when on the daily chart we saw that. So now we're finally breaking into new highs, and you know it, Greg, and you even just said it. When something can trend, you don't want to fight that, right? No. The path of least resistance is what it's currently doing in the trend. Tyler, you talked about that in a recent Tales of a Technician blog, I believe on Tuesday, where you detailed the difference between momentum and continuation patterns. Tyler, the weekly chart gives you a lot more, upside potential in your eyes and your vision, doesn't it?
It does. And I feel like the game is always easier. Instead of asking the question, like how far is it going to go? Where's the next, let's just say, how far is it going to go? Where's the top? It's much more productive to identify the key support levels and just assume the trend continues, assume the path of least resistance is higher until you start to break levels that would change the trajectory and the trend structure. I just feel like that is a way of changing your mindset from one of, hey, when's the top, when's the top, when's the top, to
Mhm.
one of, we're bullish, path of least resistance is higher until I break this level. You draw your line in the sand, which on the weekly chart, really it's, to break the weekly trend, we got to drop quite a bit, but you just don't overthink it. And this, I feel like it's a little counterproductive sometimes, because I feel like the more you know, the harder it is to ride a trend, because you think too much, and you worry about what bad could happen and why the market shouldn't go up. And sometimes it's like, dude, just chill out. The trend is up. Don't overthink it. Unless we break support, you just assume every dip gets bought, every breakout gets chased, and keep it simple.
And one quick other timeline look on this one, as we are doing multiple time frame analysis, when you're trying to understand something, break it down. That's a good exercise to go through. Go down to an hourly or a 4-hour chart, because you mentioned the sell-off yesterday, the red candle. That red candle stuck a couple of different intraday levels at 13,800 that I'm impressed with as well. It was an old resistance point from Friday, over the weekend, that support zone that you're drawing as well. And there was some old noise around 13.8, 13.9 back in February from 45 days ago or so, that it kind of also just blew right through, and then it held those levels as well. So different time frames aligning here, Tyler, and the hourly chart is showing me whatever that little sell-off was yesterday, at least for one day, the market scooped it right up.
It did. Yeah, like I said, you have to be impressed. You have to be impressed. And I think I wouldn't fault somebody if they chilled out yesterday. Yesterday was a tough day to add new trades. But I feel like being willing to come back in and be like, okay, it was one down day. And the other thing too, is there's a lot of other setups. I'm not saying that it's easy to buy the indexes up here. I'm just saying that because they bounced back so well from yesterday, it almost like it gives you permission to go shopping, to go find something that's doing well, which we'll talk about here in a bit. You're seeing this resurgence in gold and some of the gold mining plays. If nothing else, I think today just makes me willing to go back in and add some exposure when I have good setups.
Well, I'm even seeing some strength in some of the chip makers. I know Taiwan came out and reported their earnings. We'll talk about it here when we get into stock talk. But as I look at some of the top performers on the Nasdaq, Tyler, just give me a quick look at a couple of these. Give you an eye on what I'm seeing as well. AMD, everybody waits for AMD and watches AMD, right? That's a nice little candle pushing back into resistance. Who wouldn't be interested in an AMD breakout here at 80? Oh, yeah. Whatever that is, 84, is it?
Yeah, 84. It's probably your level, yeah.
That's potentially a higher pivot low into a breakout in a sector that's been strengthening. Now, earnings coming out, so you got some time logistics here that might prevent some people from making that play. But you like the price action. Look at Nvidia. Nvidia was in the news the other day, coming out with more competition with their foundries to compete against Intel, and just reaffirming their revenue and reaffirming their new crypto mining units were doing well and better revenue. Look at Nvidia clearing into new highs, just on incredible momentum after, and that is almost an 8-month consolidation. Yeah. So I don't have it just overstretched. I don't have it that way at all on the Nasdaq. Now I know we're range up in some ways, like pay ranges and time ranges. So it does always get traders to think about that. And I think it's a natural question. Where is the top, right? After you've had a good stretch in the market, but you have to trust what you're seeing in charts, and you have to read them on a daily basis and make the best decisions you can. Right now, we're just seeing continued momentum, in my opinion. Yeah. Flash through all of the other indexes if you can. Ty, just give me a quick roundup.
So this is the Russell's the one that's the odd man out here. It tried to wake up yesterday, right? Yesterday was impressive, sold off. Today kind of if you want an area that's not overbought, that's not extended, it's small caps. And as we said yesterday, that's going to correlate with energy. That's going to correlate with financials. Those are a couple of areas. If you're wondering who's not up a ton, it's those. I would not mind this breaking out here, Tim. If you want full-fledged participation, give me a break over 2,300. Nothing burger today for me on this. And quite honestly, I think any dancing between 2,200 and 2,300 is noise. You get this to wake up above 2,300, then we have something to talk about. But not everything is going crazy today. You are seeing some areas sit out.
One quick thing on this chart pattern, we were talking about it the other day, and the team tackle members out there said that looks like the Batman logo. And I don't know, kind of if you relax your eyes, like one of those old pictures where you could see the sailboat, you see the little Batman logo there a little bit.
Yep.
You see it? You got it?
A little bit, yeah.
2300 break, I actually think is interesting here. I wouldn't be too concerned about 2366, but I would be very interested if you can clear that range that you're in there, Tyler, between 2200 and 2300. Yeah. But it's pausing right now, and a lot of that is pausing just because of every sector is taking its turns, but a lot of these sectors that are driving this area of the market are not necessarily participating right now. Energy is still kind of waiting, hanging out, where we're seeing strength in healthcare and tech right now. What about the Dow? And I think that's the last one we'll look at, the YM contract, DIA.
This echoes the S&P. So I would say the same thing on here as the S&P. So strong, just continuous. These red bars are very, very small, very minimal selling pressure. Trend continues. I see nothing but bullishness on this bad boy.
Go ahead.
Just real quick, this is where you're seeing relative strength too, right? Industrials, materials, they cyclical areas. These guys are a leader right now for sure.
Mm-hmm. And here's the thing, as I look at the components in the Dow, or as I go into the components in a sector, when you see something just up at the top, Greg, you can generally still find interesting setups as you go down into the components. Like look at Procter & Gamble, Dow component here. Consumer staples are making a comeback. I want to look at those sectors here in a little bit. That's a nice little high base heading into their earnings report next week. Take a peek at McDonald's. It's not like McDonald's is just running every day. They've been consolidating up near their high, kind of basing up here at the top,
Yep.
Let's take, but then you got the Home Depots, right? The Home Depots that have just gone gangbusters. And of course they're to the moon. No question about that one. We looked at Goldman yesterday, but even Disney's been taking a couple of months off. Big Dow component as well. It's not like everything within the underlying of the market as you go through top-down analysis, not like everything's up in the stratosphere, Greg. There are still plenty of opportunities, which you guys always display in the weekend reports, as well as like Trade Masters last night. So markets are bullish. You got to just go out and find the ways that you want to play it. Greg, do you agree with that?
100%. And that's, I think, what Tyler and I showed in that Trade Masters last night. Even though the indexes are running, there's still plenty of good setups out there, right? Mm-hmm. We have a few retracements that were available to us. We got plenty of breakouts to find. This is why we do the top-down analysis too. You look at the index, you see what it's doing. If it's running hot, then you can break down to the individual, either the sector ETFs, or then you can break down to the individual components. And there's always trades out there. And like I said, we found a bunch last night, and there's still, if you seek, they'll shall find kind of thing. There's lots of trading opportunities out there in these sectors. So.
Well, and let's talk sectors for a second. I'll go ahead, Ty.
Just real quick, one maybe underreported move today that I think is worth mentioning is what's going on with interest rates. If you look at the 10-year yield, you're seeing a pretty big drop in rates. And when you think about one of the reasons ostensibly that growth stocks haven't done well recently, it's because of this upward pressure of higher rates. You're seeing that trend turn a little bit. And so I suspect that could help asset prices if you start to see this thing unwind a little bit.
10-year yield today. Yeah, that's interesting. I did see that it was obviously coming down. That's a pretty good red candle though. Right there in that TNX contract. So that's interesting. Yeah, good note on that. I do want to, now that you mentioned that though, do a very natural plug for something we did on Monday. Tyler, you and I sat down and we had a conversation about interest rates on our podcast, the most recent episode. I had a lot of fun talking to you about that, Tyler. And I don't know if anybody out there has not listened to it yet, but I would highly recommend you do that if you're interested in no pun intended, learning more about interest rates and how they can impact consumers as well as investors in the economy. So I'll drop that link. Ty, that was fun talking to you, by the way. I really did enjoy it.
Yeah, it was good. It's this is the kind of stuff they don't teach you in kindergarten. So
I was talking to my daughter. Oh, sorry, my friend.
Oh, go ahead.
I was talking to my daughter about that this morning. She's 20 years old. I better got that right, by the way. I had to pause while I was saying that. She is 20 years old. And we were talking about the financial markets and some of the stuff she's learning right now that she never learned in school. And she's like, well, the question, we've all gotten this, why didn't they teach me this in school? Well, they just didn't. It's not a part of the educational system to give proper financial education in this world, Greg, is it?
Yeah. No, it's funny. The stuff you guys talked about interest rates, you get to have an MBA from one of the Ivy League schools, and you're still not going to learn that stuff, right? So the problem is, and you could go back and look at the history of things. they feel that you need to learn other things other than financial management, which I think is a crying shame myself, because we all have to deal with this kind of stuff, right? So yeah, it's a shame that it's not taught in schools, but hey, we're teaching it here, so come join us, right?
Dang right. One thing I did want to do before we move off of broad market analysis, take a quick peek at three of the stronger sectors here today. We've already looked at tech, but three outside of that: staples, materials, and healthcare. And the move in gold is something we're all excited about. That staples high base is something everybody should get excited about. And there's a lot of components in there that are interesting. Ty, can you also break down those three sectors for me?
Yeah, staples,
especially that XLB. Let's break that one down, Ty.
Mm-hmm.
Maybe I'll let you do that one, Greg. Okay, maybe I'll let you do that one. I feel like, Tim, do you feel like the longer you trade, the more you feel like every time the consumer staple sector gets beat up, it's a buy? Because it's coming back at some point, right?
It's so defensive in nature because of the underlying. It's true. It's a good point, not one I've thought about exactly like that until you brought it up, but it is so defensive in nature, just based on the companies, the way they have revenue, like Walmart.
Yep.
I mean, just think about Walmart for a second. One of the biggest components in staples, obviously. You look at a 15-year chart on Walmart, whenever it's substantially beaten up, it gets scooped up. It just does, because the company posts over 400 billion revenue a year. They're consistently profitable. They're moving into online. They have a wonderful business model. And Greg, yeah, they're the old school kind of thing, right? They actually do make revenue, So it's like, yeah. So yeah, I agree, Ty. Staples are interesting to me, and I love the setup that we're looking at here. It's different than scooping up the bottom, but this is more of a high base. They're strengthening, and I don't think they're done by any stretch.
No, and it's it's not a super sexy sector, but there's a lot of individual names. I mean, you can build trades in Walmart that have really good ROIs, right? Mm-hmm. So if you want to amp up your returns on the Procter & Gamble and the Walmarts and the Johnson & Johnson of the world, it's very easy to do using options. It's just a matter of, can you find a good pattern? And even on XLP, by the way, I'm sure, Tim, we could structure like a poor boys cover call on this and get a 20% return. Like, it's not hard. So I really like this setup. It's nice, very constructive, and this has been, I think, emblematic of the market here recently, is that it's just behaving itself. Like technical patterns are working. Mm-hmm. Dips are being bought, breakouts are being bought, trading with the trend is working, and yeah, I mean, this is not chasing the S&P. It's finding a sector that has done nothing for 3 weeks and is giving you a breakout to new record highs. Mm-hmm. Well, what's not to like?
And I like a lot of the components underlying. I mean, you got to navigate the earnings report, which is where the ETF might be a better way to play it if you're looking exposure to staples. But like Kraft, let's flash you a couple patterns that caught my eye there. Tyler, KHC, Kraft Heinz. Greg, I know you love your ketchup, right?
You betcha.
I do too. Yeah. Look at that. The high base pattern kind of developing. We mentioned Walmart. I actually think that's got tradable signals in there, as it comes up above that next pivot point. If you can get a breakout, I think you can place something in there.
Yep.
Yeah. Even let's take a look here. Philip Morris, cigarette company. Now, earnings, this is where you got to navigate all that kind of stuff when you're doing your scanning, but you can see the strength in the underlying in the sector. And quite frankly, that's where XLP might be a way that you can approach it with something creative like you did yesterday, Tyler. I think it's a good call.
Yeah.
Give Greg his.
Go ahead, Greg. I'll be your hands, buddy. What you got on XLV?
XLV or XLB? Because last night on Trade Masters, I talked about XLB breaking out. And sure enough, it happened today. So it was kind of basically what you said with the XLP. There is, we've got the sector ETF. It's been strong. It's staying strong. We're getting the moves that we're expecting, and we've got a lot of earnings to deal with. Well, for those folks who are not savvy with the earnings plays, you know what? You've got these awesome ETFs that are just doing exactly what we thought they would, right? Mm-hmm. So this breakout here I talked about last night on Trade Masters, breakout of the 81 level there, and it's doing exactly what we thought it would. It looks very similar to XLP. So now you've got those opportunities where you've got a breakout here if you got into it. Now you've got that chance in XLP to do the same thing. You can play those breakouts very well. You don't need to worry about earnings. Your implied volatility isn't going to mess with you. much. It's just a good setup for those folks that are a little leery about trading through earnings. So yeah, it's just I just love the way all these things, and I think Tyler actually said it best. These things are behaving themselves, right? Which is not something, I wrote in the rookie blog, I think it was last week when I wrote, the markets, the indexes themselves have been kind of bad actors for a little while there. Not in the last couple of weeks, but previous to that, they were really kind of funky. But yet the individual components of them were playing out quite well. Now we've got this so that the indexes are playing well together with the sectors as well, and they're just acting the way we would expect them to. And if you can find those things that do act the way we expect them to, you can take advantage of that. That's how we trade, right? That's what we look for. So I think it's fantastic the way these things are setting up.
There's so many interesting areas within XLB. By the way, chemicals have been the leader for such a long time, like Sherwin-Williams or Linde. If you look at LIN or SHW, you see that, they're up near the highs, pushing for breakouts. But it's not just that right now. You've got the copper companies, which everybody tracks FCX, right? And copper has been making a nice little move. We analyzed the copper contract yesterday. Got to navigate earnings on so many of these. You can't hear a broken record. But that's a beautiful looking pattern, especially if you put that on a weekly. Obviously, a 3 triple top, consolidation after a couple months in a product that's going to see inflation, underlying copper prices. I don't agree with this note, but I saw Goldman Sachs saying something about copper might be the new oil, and it made me at least think about that. And I got to think through that, noodle that a little bit more. But obviously, copper's been strong. It's up near the highs again, pushing earnings, the only consideration. But even the underrepresented areas of XLB that haven't played ball, just go to the GDX, because we can pick any gold mining stock we want to, but the gold miners, they are coming. And we've been talking about this, and Coach Matt has nailed gold analysis. And while we're talking materials, we might as well talk gold here a little bit. We'll come back to the last sector in just a second. You look at this gold chart, gold miners, Tyler, put in the higher pivot, those subtle things in technical analysis.
Yep.
They matter. They really do. They may not matter on any given one day as you're reading it, but over time, as the information changes, higher pivot low, coming up to the resistance, didn't sell off. You take one on the chin, but instead of coming range down, you just have 1 or 2 days. Then the consolidation forms. Here we are breaking higher, Tyler. Give me a thorough read on that chart outside of anything you want to add to what I just talked about.
No, the two phrases that came to mind, making money with trading is all about timing. And technical analysis provides the best timing tools available. And this has been a masterclass over the last couple of months in terms of how that works. You think about what happened with the Nasdaq, where you got a higher low, you broke out, you ripped. This has been a little more subtle. I mean, GDX gaps a decent amount, but even so, the pivot formations have shown you that sentiment changed, right? And the other thing too is the last week, you had nice consolidation to where, unlike the last upswing where you got punched in the face and you had a pretty good pullback off the 50, this one you rally and you rest, right? It absorbed any selling coming in. A base is more constructive, more bullish than a retracement. And sure enough, and look, you wouldn't have known yesterday. You would not have known yesterday that today was going to be the day. But it doesn't matter, because you would have known that the level it needed to break was 34.80, right? And so there's a difference between us saying, hey, yesterday you should have known this was going to rip today. No, not true. But you should have known there was a higher pivot low. You should have known there was a nice high base. You should have known the ceiling that needed broken to signal the breakout was 34.80. You could have figured all that out before today, right? It's not like you have to come in here 3 hours into the trading session and say, oh, shoot, I should have been looking at GDX and known that 34.80 was the level. And this is why you have alerts. This is why you put in alerts. You look at charts and you say, look, that is the level that interests me. If it gets there, I'm interested in looking at it and doing a trade. I think in this situation, it was obvious what you wanted. And sure enough, when it broke 34.80, to its credit, all it's done is gone straight up all day long. And that's about as good as it gets when it comes to follow through, instant profit. Everybody wants to make money 5 minutes after they get in, 30 minutes, an hour after they get in. Doesn't always happen. This time it did. And look, if this goes back to where it used to be, there's plenty of potential upside from like a position trading perspective. I want to take it a day at a time just because we've had other, failed rally attempts in gold and such. But I think the base that this formed before the breakout lends itself maybe to me having more confidence that this has legs, that I'm willing to maybe be a little bit more optimistic about this than maybe the last couple of breaks above the 50 MA.
Mhm. Yeah. Greg, how are you reading gold miners? And I do want to go next directly to gold analysis, Tyler, on the next chart. But Greg, how are you approaching the gold miners right now? I know these are the kind of companies that you've been watching for your entire career. So it's probably grabbed your interest and piqued your interest. And we've been nailing this on the halftime report. I got to give Coach Matt credit. I mean, he has hit this day by day by day by day, specifically on gold, but even on gold miners as they're correlated, obviously. Talking about these conditions, Tyler, you've been here. We've all been here when we're doing it, and he's hit it right on the head on this one. Greg, how are you approaching this?
Yeah, so I couldn't do a better job of the technical analysis than Tyler did, so I won't even bother trying. I think one of the things that I found interesting about gold was when everything else has kind of been running and very heated, gold was one of those sectors that was giving us a good risk reward setup. So you found after you got that pivot there, that retracement, it gave you a low risk entry for a decent little run there. Now we've got a breakout. You've still got obviously it's running today, but before, had you looked at it before today's candle, you had yourself a really good setup there, a low risk setup with a lot of upside potential. So this was one of the areas of the market where it hasn't been really screaming along. As a matter of fact, it kind of was getting a little beat up there, and that really is what kind of I look for. I want to look at those sectors where I know that really fundamentally nothing has really changed, but technically it's giving you just these opportunities, these setups that are just magic, right? So I love the way gold's set up here. It's reversed. It's set up the higher lows and the higher highs. It's just, as far as I'm concerned, it's beautiful. It's just a work of art, really. And you've got opportunities here. Even now, we're going to get a pullback to that 35 level. Like it's going to happen, right?
Mm-hmm.
That's another entry point, right? If that support now holds, that old resistance, you've now got another entry. As Tyler said, if you're looking position trade wise, you've got a lot of room to run to even get back to levels from a year ago, right, or 2 years ago. So just a really good setup overall. Like I said, the dollar is showing a bit of weakness too, right? When you start looking at gold, you look at the US dollar and it is showing a bit of weakness. So it is correlated in that manner where typically you start to see a little bit of weakness in the dollar, you do get that upswing in gold. So you've got that tailwind behind you as well. So technically it looks good. Fundamentally, there's lots of reasons. The interest rates dropping, that's going to affect the gold prices as well. You've got a lot of things really helping you out here, as far as I'm concerned.
Let's look directly to that futures contract if we can, Ty, and then also have a discussion about the dollar, because these are all correlated or inversely correlated with the dollar. Obviously, it's all connected in the analysis. And the GDX is looking great. One thing I love about GDX is I don't have to have it rip from 36 to 44 for me to want to be in that trade, because it is a wonderful covered call instrument. So if I'm loving liking or enjoying the technical conditions as they are developing on these breakouts, I can approach it with shares. And then as I feel like it tops, I can write calls and collect premium. Over the years, it's been a wonderful product for that. Options are liquid there. And a lot of the analysis on GDX is going to be based on that GC as well. So let's move on to that GC and talk about it a little bit, Ty. Ty, it might be a work of art chart if you truly understand what you're looking for here. Break it down for me.
Yeah. So for those that have been asleep or not joined us the last couple of months, it's been all about this double bottom pattern, which when you think about the psychology, remember, every pattern is a reflection of what market participants are doing, like collectively, right? Tim and me and Greg and times a million. Everybody's buying and selling. There's all this supply and demand. But over time, these chart patterns start to form that tell you something about what people are doing, what you have all these individual traders buying and selling, but collectively they move markets, and collectively they create patterns. Some of them are constructive, some of them are not very constructive. And it means something about how people feel about how they're trading, where they're placing their bets. When you get a pattern like a double bottom, where you come down, think about it, the prior drop here in gold from 1800, you don't find any buyers until it goes down to 1680. You make a lower low, supply is increasing, demand is decreasing, et cetera, et cetera. You rally, you get rejected again. If you think about it, up to this point, which was 2 weeks ago in gold, there's not really anything constructive about it, right? The story has been changing over time, but really it's the last 2 weeks that gold has got its act together. And the first sign that things were different was it didn't break a prior support zone. The prior 1, 2, 3, 4 rallies or sell-offs did break support. This one did not. When buyers come up and defend a support level aggressively like that, it's a change in character. It means they're not putting up with the bear's crap anymore. Like they are buying the dip. That's a change in character. And then you went up all the way to the prior high. You didn't do that the previous bounce, or the one before that, or the one before that, or the one before that. That's a change in character. So to Tim's earlier point, you're just seeing these subtle differences in how gold's been behaving post, April, really just this week or this month, right? The last 2 weeks. Goes up to resistance. Does it sell off to 1680 again? No, it settles up there. Just like GDX, right? The last rally in GDX had a big pullback. The most recent one didn't drop that much. It just consolidated at the high. And then it made it obvious as to what level you needed it to break. You needed to break whatever the resistance zone is. And so I think anybody could have identified, call it 1750, that zone. That's the level that it needed to break. It's breaking it today. It's breaking the 50-day moving average. So this is a situation where I would draw a line at the low of the base that preceded today's breakout. And I would say, look, I'm not going to overthink this. 1725, that's my alert. If this thing stays above 1725, I see no reason to be bearish on gold, right? I'm going to assume that buyers now have the upper hand. I'm hoping that we have more follow through and better luck than the last couple of times gold tried to bottom. I think we do, because I feel like, we're at lower prices, right? We're trying to recover from a lower level, which means there's more sellers that have gotten out of the way at this point. And it's being echoed by what's going on in gold stocks, just having very good constructive nature. But bottom line for me, 1720, we stay above that. I don't know if it goes to 1800, 1850, 3000. All I know is the bottom is in, and I can start to be more optimistic on this thing.
Yeah, I love the breakdown, the analysis. I think is really helpful to go through some of the detail of those technicals that you were looking at there, Tyler. Thank you very much. And Greg, you did mention the dollar. Part of what is aiding to this, and a part of the analysis, is the weakening dollar. Look at the UUP contract, or ETF, I should say, real quick. This one. And down here, testing support. We're at a significant level, and UUP, you can see it at 24. I believe that's 24.6 right there. That's a key line that you've drawn there, Tyler. If that breaks support, this is game on for gold. It's also game on for a lot of different commodities and probably equities as well. A weakening dollar does help a lot of asset classes, right, guys?
Absolutely.
Yeah,
it does. And here's the other thing that I think should give you confidence. Gold today did not need the dollar to go down. Just needed it not to go up. I mean, that says something that it was able to rally regardless of the fact that the dollar's not really doing anything today. So, I don't know. To me, that gives me a little more confidence. It didn't require a massive red bar in the dollar to catalyze and spark the breakout. It did it regardless. That's bullish.
I had a question in the chat. I've been chatting with her for just a second. I do want to go through it. Go back to GDX for just a couple of minutes here, and go to the trade tab, option trade tab. Looks like Patricia, long-term team tackle member. Patricia, great to always see you here in the show. You always participate and have conversations in here. Really appreciate it. I had a great question about her strike price in May. If you look at the 36-day contract, she has 36.50. And Tyler, the essential question, I'll sum it up because it was several back and forth a little bit here, is am I going to get assigned? Do I need to roll this thing right now? It's starting to move higher. She probably got a little bit less credit than the 107 that's priced for right now if it was a recent trade. And my answer was, and let me try to clarify for you, Patricia, if you're in the 36.50 in May, I understand when you're seeing the equity go higher and you don't want to lose your ETF, you don't want to lose your stock, you're going to get a little bit of anxiety, and you can always roll up or out. like Tyler, you could absolutely buy that back and roll it up to like 39 or 38 and take a small loss on the option. But I personally think you could be patient here. We're up 3% on GDX, 4% here today. We're ripping higher. It's still an out of the money contract, which means all of the value is extrinsic value. And if you're a cover call trader, and I know Patricia's gone through the course, the Tackle 25 course has some really good modules on how to manage these calls as they do move higher. But both of you guys are cover call teachers. You both cover call traders. This is a question we get consistently about how do I manage it if my stock or my ETF is moving towards my strike price? Greg, what are your thoughts on that?
Yeah, so I'll be doing actually the Tackle 25 tonight, so I'll be talking about this exclusively. But I've always set a rule for myself: hits my short strike, I roll it. Just no question about it. I guess the only question is that's if I want to keep it. If I don't want to keep it and I've got some profit and I just want to take it, that's fine too. But if I think that there's some potential to continue on, which in gold I absolutely think there is, then yeah, it hits my short strike, I roll it. That way I don't really have to worry, too much of what it's going to do. I have that rule built into my trading and I stick with it, and it's served me well. If you roll at your short strike or just slightly into your strike, you can usually roll out far enough and get maybe a credit or even, maybe you take a little bit of a loss. That's fine, but you can give more time to get more value, right? And so you have to kind of do that before the intrinsic value gets crazy. If you wait too long, then that becomes a problem. That's why, like I said, for me, it's the short strike. That way I don't have to guess, okay, is it gonna stop at 35 or 36 here? Is it gonna go beyond that? I don't really know. I would think that it's gonna go beyond that, but I'm gonna let the market tell me what to do. And so that's really the way I look at this.
Mm-hmm. Okay, and I'm putting a couple links in the chat here for people because I'm glad you reminded me of that Tackle 25. Patricia, it's a wonderful opportunity. I know you're a part of that team in Tackle Trading, the Tackle 25, because I've seen you go through the course. Join us tonight. Greg will be teaching this, and he can go into some more detail about some of these things here, Greg, talking about management, talking about roll and call options, all of those kind of things, and answer a bunch of questions. That would be great. Fantastic. Tyler, anything you want to add to that on rolling strikes or anything?
No, it's a great problem to have. I would love nothing more than to feel like an idiot every month for selling calls. And quite frankly, I've felt like an idiot quite a bit recently. So I'm making money on it though. So it's very easy to, I think a covered call can be torturous because if you want to, you can make yourself feel bad when the stock goes down because you own the stock. Mm-hmm. And you can make yourself feel bad when the stock goes up because you're short the call. And it's all a matter of perspective. Mm-hmm. Yeah. But I would just caution you, unless you're a glutton for punishment, just don't beat yourself up. Like you really can't beat yourself up every month, no matter what happens, unless you get that sweet spot where it's just up a little. But you're making money overall. It's a good thing that it's running to your short call strike. Mm-hmm. I'll happily buy back calls at losses every month for the rest of my life.
Well, and I'm a huge believer with covered calls, systems and trading and rules. You should clarify what you're going to do. Yeah. Be patient not to micromanage and overthink this stuff. These are cash flow trades. But when your rules are met, you should take action. So you want to find that clarity so you know what your system is, you know what your personal rule is based on the design, but then be patient enough to just let your rules work themselves out. That's the approach to cover calls, because if you overthink these, it's like watching paint dry, Tyler. This is not that kind of system. So I would recommend take the course if you've not. I dropped a link there in the chat. A couple last ones here in broad market analysis, then we'll get to individual companies news. And then Greg, you've got 3 stocks today you're going to show us. Is that right?
Buy one, hold one, dump one. You betcha.
We're going to play that old buy one, hold one, dump one. And Tyler, now you get to be the judge, and myself as well. All right, let's take a peek at Bitcoin the day after Coinbase IPO'd. Bitcoin kind of hanging around, holding the breakout channel. Tyler, as long as you hold above that line, you got short-term technical conditions that are in play here, don't you think?
Yes. Yeah, just resting, fine, let it rest. I think, first level of concern in the very short term would be if it breaks back below 61,000 bucks. But for the trend to reverse, you got to take out the prior pivot low at 55,500. So any kind of chopping basing in this area, fine with me. Let it chill. This is an inside bar. When you get one candle in the body of the previous candle, it's not that interesting. It's not that interesting. It's just resting. You don't want to read too much into it. And so I just go with the overall trend here. Still looks good to me unless we take out one of these two red lines.
Mm-hmm. Bitcoin's not your kind of product, Greg, I don't believe, but you have to at least acknowledge it has caught the consciousness of the markets here in the last 18 months and pretty much for the last 8-9 years. That Coinbase IPO, quick look at it here yesterday, Tyler, COIN. Greg, can we do fundamental analysis on Coinbase?
That's a hard no.
That's a hard no as of yet. Everybody's trying to figure out how to value this company based on growth, based on future projections, based on what it means to the industry and crypto. I think a lot of people need to let this one chill, need to take some time. You don't have to be Cathie Wood. Cathie Wood bought 250 billion of Coinbase yesterday, but she's probably going to buy a heck of a lot more over the next year, Tyler. So it's not like institutions.
I'm glad you brought it up. I have a question on that. And by the way, I think you meant 250 million, right?
Oh, was it? Yes, of course. Yes, of course.
Here's my question. Did she get it? Because it opened at whatever, $380, right? So if you're an institution like Cathie Wood and you're like, look, man, I'm not buying 3 shares. Okay, I got 250 million bucks. Does she get it at the direct listing price where it was supposed to open at 250? Or did she have to pay up and buy it at $380 or whatever?
I don't know.
Hold on. Hold on.
Yeah.
I was not going to come into the halftime report, but this is an interesting question that does interest me. Ask the question again, Tyler.
So the question is, when a company goes public, when you have an IPO, and I'll elaborate just a little bit, and you can tell me if I'm misunderstanding. If I'm an institutional client, Goldman Sachs or whatever, whoever's underwriting this IPO, I don't know exactly how they dole out the shares, but they are able to buy it at the IPO price, right? That there's a certain amount of investors that get it at the IPO price. Typically, you got to have some connections, right?
Yeah.
All us other schmucks, we can't buy it until the thing opens.
Which is what we hate about IPOs.
Which is what we hate about IPOs.
Right.
Yes.
It's the roadshow, right? We hate the roadshow because the roadshow is where all the big dogs with the big pockets with everybody who knows each other, they get that opportunity, right, to get the 250 price.
Yeah, and I'm assuming they can unload it whenever the heck they want. They're not insiders, right?
Mm-hmm.
So it's like
they can unload it on the IPO.
Yes. So it's like, well, yes, sign me up, dude. I get an instant pop almost every single time.
Yeah. Now what we don't see though is those amount of IPOs or those roadshows that never actually go IPO and fell. Right.
Fair enough.
We see the success stories of actually coming to a conclusion. But to answer the question, Ty, if this was a traditional IPO, then Cathie Wood would have had the opportunity for the ARK Investment Fund to come in during the roadshow.
Mm-hmm.
This was a direct listing. And so there wasn't the roadshow. And so the most likely scenario that is that Cathie Wood actually made those transactions yesterday during the market.
Yeah, I think she would have had to.
Yeah, and again, if there was a roadshow with this IPO, Cathie Wood would have been obviously the CEO of Coinbase's first appointment would have been to call Cathie Wood, right? And so, and yes, Cathie Wood have got that opportunity to buy not Coinbase at, quite frankly, 250, but Coinbase even less than 250. And so, but right now though, because it was a direct listing and the insiders have the ability to sell the shares upon the IPO, Cathie Wood most likely literally just allocated the portion of the ARK fund into Coinbase yesterday. And I can't verify that, but because of the direct listing and because there, and because there was no IPO roadshow, the most likely scenario is that Cathie Wood literally sold Tesla shares yesterday and allocated them into Coinbase. Now, she didn't get out of Tesla. Tesla's still the number one holding. She probably just allocated $250 million.
Right.
I did catch the billion.
I did say billion. Maybe all the numbers just are inflated these days.
Well, the opposite of whatever Austin Powers was that moment, right? And so it was 250 million, but she probably just said, you know what, I got 250 million in spare change from my Tesla transactions over the last 5 years. Let's take some profit, allocate it into Coinbase, because if you look at the ARK fund, the Tesla allocation is actually a lot higher than where it started. And we all know how that works. You start getting gains, you need to bring in the profit to reallocate back to where you are, where you want to be from a portfolio allocation. So most likely Kathy Wood yesterday made a decision. She probably made this decision a long time ago, but she probably sold the shares of Tesla yesterday, or she's been selling those shares of Tesla and planning on allocating. And she most likely bought Coinbase yesterday.
Yeah.
Okay, so can I geek out on this for one more minute?
Yeah, of course.
Okay, so with the direct listing, is the pitch that it's not going to favor institutional clients? We're going to give the retail access to this as well, and everybody gets the same chance to buy it on the same day. Is that part of the appeal?
I think that, are you talking about the direct listing?
Yeah, versus
Think about the direct
IPO.
listing as the bastard child of the IPO married a SPAC.
Okay. But what's the incentive on the company side? Like Coinbase goes that route because
isn't
the incentive is
faster?
the insiders. The incentive is the insiders can sell upon the IPO listing price.
So they get to the market
and
quickly.
so that's the incentive. And also it's to, if you want to go to market quickly to take advantage of something, a direct listing or a SPAC is probably the preferred method there versus an IPO. I mean, guys, an IPO. I mean, we got to see that CEO on CNBC for like at least 6 months. I mean, they got to go pitch on Jim Cramer. They got to pitch on the Friday show. They're in pitch mode for 6 months. And so if you're trying to take advantage, and you got to go through the banking system and all their underwriters, and we all know how underwriters need to get paid these days. So it's just a very lengthy process that is extremely expensive and not efficient. And so a direct listing, if you want to take advantage, a direct listing makes a lot more sense.
Well, especially when you know the demand is there, right? Like we don't need
the
to drum
demand,
this up. Everybody knows Coinbase is legit. Right?
Okay, so if you're the CEO or the insider of Coinbase, and you're like, hey, listen, in 6 months from now, like Bitcoin could be 20K again, guys.
100%. Yep.
Like we know the euphoria is here. Let's go now. Let's rock now. We've been living in a basement for the last 9 years, building this $90 billion juggernaut. It's time to take the wife out on a nice vacation. So they're trying to take advantage of that right now. And so, yeah, I do think the direct listing made some sense for Coinbase, but because of the direct listing, most likely Kathy Wood made the transaction yesterday.
Got it.
And Bitcoin, even with the volatility around Coinbase and all the roadshow, is still holding up.
Very quickly, I know we're talking Coinbase here, but very quickly, I'm gonna dive off here. Hey, I just want to say, Team Tackle, how about them apples on gold, guys?
We were talking gold,
How about GDX front running here? Oh man, you gotta love technical analysis. Get some.
How about them apples? How about them apples? How about
not the second one? Not the second one.
All right. Thanks for popping in, Matt. Appreciate you as always.
Tyler had a question. I just felt I could answer it. That's it.
No, I'm happy you came in. Yeah. Thanks.
Awesome. All right. Back on some market analysis here real quick. We're going to get into stock talk. One thing, economic calendar wise, I just want to give you some quick data. You guys, you've seen strong economic numbers for a while. Retail sales blew out expectations. Unemployment claims lowest since the pandemic. We had a manufacturing index report, which was on fire again, and manufacturing in general has been heating up like crazy the last 3 months. More signals the economy's rebounding, guys. There's a lot of really strong projections this year. Obviously, the economic data right here in the U.S. is confirming that. Let's move into some stock talk here today, Tyler. And we're going to there's a bunch of earnings, so we're going to round them up pretty quick. Give me Bank of America first, if you can. BAC, the financial sector, we highlighted several stocks, including JP Morgan, Goldman Sachs, those types yesterday, including Wells Fargo. Wells Fargo had a great quarter. Bank of America is selling off a little bit here, kind of within the market maker expectation. A 4% sell-off on earnings is not that crazy. I had a really nice stretch there, but basically they came in, they beat EPS numbers, they beat revenue numbers, they showed all of those kind of things. They even drew down their credit reserves. There was a lot of good from the report, but they just didn't have this upbeat future of, revenue projections and EPS projections. And so it's kind of one of those reports, Tyler. The market shrugged off a little bit there. Anything in the chart grabs your attention, you interested in?
No, I do want to emphasize the point you made, though, which is if you want to know if the response to earnings is substantial is worth changing your outlook, whether it's an up day or a down day. Tim mentioned this in passing. You can know what was priced in. And so if the market was pricing in a 4% move and Bank of America drops 4%, it's not that bad. Like that's within expectations. Where it would be more interesting or substantial or potentially worth maybe investigating further or changing your outlook is if it was expected to move 4% and you saw Bank of America down 8%. So if you want like something to compare the move against, go to that auction chain. You have to look at this before the earnings announcement, but what was the market maker move? And by the way, you can go back in time using ThinkBack. But your point is well taken, because this was brought up in the Traders Lounge this morning. Hey, Bank of America is getting hit. Is this a sell the news type response? Yes, but if it was within the expectation, you don't have to think that the Wall Street is completely rethinking their bullish thesis. Could just be short-term noise, nothing crazy out of the ordinary.
Mm-hmm. Yeah. And there was one quick question in the chat just while we were on that topic, and the chat comes in a little bit delayed. And Bank of America, I'm with you. I got nothing else to add to that. Obviously, that's not a move I'm going to over concern myself with fundamentals. The numbers were strong. They came in, they beat top line and bottom line. They just didn't inspire investors to want to gap it out to new high. That happens within the market maker move. Glika asked, why do you think Riot, quick look at Riot, and Mara are down? Maybe people are taking profits to buy COIN. I don't think so, Aglika. I think right now, and what's the other one? MicroStrategy, MSTR. These kind of companies that are positioning themselves as Bitcoin type companies. And Mara, for example, they hold Bitcoin, they mine Bitcoin and all those kind of stuff. It's one of those things. I think they're just correlating with Coinbase over the first couple of days. I wouldn't overthink it right now until we start to see this price kind of shake out. We've seen volatility, right, on this one as from Coinbase kind of moving back and forth and up and down. So you had the IPO pricing on Coinbase. We've seen volatility for 2 days. Let's not overthink it until we get more data, right? Yeah, absolutely. Let's not overthink it. I don't want to draw big conclusions till we get a little bit more information, a little bit more coaches' input on that. But it's a good question, Aglika. I think a lot of people are asking that question. Pepsi next, if we can. Earnings roundup, just as we're going around. Consumer staple company here, guys. They reported earnings of $1.21 EPS, revenue of $14.8 billion. That came in above expectations of $1.12 EPS and revenue of $14.6 billion. Narrow beats, nothing there in the chart. Pepsi's not a trading stock, more of an investing stock. Any interest from you, Greg, on Pepsi, dividend payer here post earnings?
Yeah, I was kind of hoping they'd get crushed on earnings and get a nice pullback to get into it. But yeah, basically a nothing burger at this point. Now you got to look at it technically and say, okay, is there an opportunity here? Could be a breakout, that lower short-term trend line there. Yeah, other than that, it's an investing stock. It's up there in price as well. So it might be out of range for a few folks, but great dividend payer. Love picking up Pepsi. I usually like to do it when I've got an opportunity for a decent price, and really earnings didn't give us that opportunity today.
Mm-hmm, mm-hmm. Yeah, and obviously not a lot of action there. It's in a consolidation. You've got to be patient letting that thing develop. But staples in general, I do like just from a sector perspective. Delta Airlines next. We had a big roundup here today. Got a pretty busy day for the week. Delta was down. Obviously that pattern, something I want you to give me a read on here, Tyler, is within market maker expectations as well. It's off by about 3%. They reported a loss on earnings of $3.55. We know these airlines have been struggling. They were losing money. That their projections now are more about the future, the reopening, getting travel demand back. But they posted revenue of $4.2 billion, which was actually a beat slightly on their revenue projections. And the CEO had a lot of good things to say about the future, reopening the economy, their profitability. They actually got to the point where they're making positive daily cash generation in March for the first time in almost a year. So made some improvements to the bottom line business line, but Tyler, not a great response. And now we're kind of stuck in the mud. What would be the next thing you need to see for Delta to be tradable?
I think you have to see a breakout. I'm not interested. I think this is an easy principle you can take to the bank. I don't like buying dips for a swing trade if I didn't make a higher pivot high. So, could this pullback be a buying opportunity? Sure, but I got a million choices here. I'm not going to go with the stock that's pulling back in a range. So for me on Delta, it's got to take out 52 bucks. Until then, this is a stay away for me. I also think that the whole economy reopening, I mean, airlines were part and parcel for that particular trade. I feel like the street's kind of moved on a little bit the last month or two to other areas that are maybe surer bets now that airlines are, up 100, 200% off their lows. It just feels like there's easier trades if you want to continue to play the economy reopening than some of these guys. Maybe because they've gone up so much already, maybe because Wall Street wants to wait and see that they start to see more improvement on the earnings side. I just think there are easier trades in this one right now.
In the short term, I agree with that. I still love the long-term trend that has been developing here. You look at the consistency since basically last May or so when we bottomed. Yeah. I mean, it's there. It's just, obviously a sell-off here on earnings, bringing it back down to support. Now we've got to test that support in these 50-period moving average that it's resting near right there. Another one real quick here, Taiwan Semi. This is one of those best companies in the market, came in and put up chalk. Greg, their revenue and their EPS were basically in line. 96 cents EPS, 95 cents estimate that they had. So they beat it by a penny. Revenue, they beat it, like literally right in line by just a few dollars. Nothing really crazy right there. And the company hasn't performed right here. And it got swept up in many of the storylines. Tyler, you even brought up potentially the emerging market storyline there for a month or so when it was under pressure. I love this stock. I'm not going anywhere from my watch list on this stock. Opportunities when this company gives them to you, I believe should be scooped up. They're just not right now in the chart here, Tyler. What is your read on that chart?
Yeah, I think this kind of goes nicely with the Delta conversation. I look at it one of two ways. If I like the company long term, then you look at sell-offs like this opportunistically. Right? Like back to Delta. If you like Delta long term, you look at bloody days like today and bigger sell-offs opportunistically. I think with Taiwan, same thing. You might say, look, I'd love to scoop up more in the low 100s. So if they want to beat it up after earnings, at some point I'm a buyer. It's just a matter of making it tempting enough where I want to wade into the waters. I don't know that it's there yet, right? Give it down to 110 or something. If I'm trading it directionally, just short term, it's a mess right now, right? So I think this is a tough play if I'm doing it short term. So you're just waiting for one or the other. Either the thing wakes up, gives me a nice little breakout over 126, or it gets beat up enough where I'm then attracted to add to longer term positions. Until then, it's a whatever. It's a stay away until you get a fat pitch one way or the other.
Yeah, I think you got to get one of those fat pitches over the middle. A couple other really quick ones, but big company names. We got to at least give the data here. BlackRock had a very narrow beat. Larry Fink said he's extremely bullish on the U.S. economy. And this is one of the best financial stocks fundamentally in the financial sector. Tyler, that one has a different technical read now, post earnings up near the high. Candle's going to make it tough for any swing trade up here. What are you seeing there? A little gap out, but it's giving it back. You got the big tail now. How do you interpret a gap like that?
Well, it's tough when it's run as much as it did into earnings. It's at today's top, it's up $100 in a straight line. And even if you were looking for the breakout, it wasn't much of a pause before the earnings. That's a tough trade for me because I'm fearful that on the bullish side, you've got good earnings. On the bearish side, you've got the fact that it's range up and quite extended. It's an overbought breakout pattern. I prefer to not take those. I would just give this some time personally. It's not a momentum stock. It's a really great company and it goes up over time. I look back and I say, when's the last time chasing BlackRock when it was up this many bars in a row made me money? It's a low odds play. Thus, I pass. Yeah, that's my take.
We're going to play the game buy, hold or dump later. I feel like BlackRock, if people invest in it, it's more of a hold company type of a long term. The performance, if you look at the long term on this chart, it's an incredible weekly, chart. Yeah. Just been a juggernaut here for several years, and the role they play in ETF portfolio management, overall financial assets, they're huge. They're not going anywhere. And Larry Fink talking, people will listen. But Larry, you're not the only one saying that you're bullish on the U.S. economy. A lot of people are. The Fed's been chattering about it for a while. So is Jamie Dimon. Last one, maybe two more. What a busy day. United Health, UNH. Healthcare heating up here recently. This one breaking out, part of the strength in healthcare, and the Dow today is on the backs of something like this UNH. UNH beat top and bottom line estimates again. We're a broken record here today, guys. We beat top and bottom line estimates, Greg. I think you're going to hear that a lot this quarter. 531 EPS and more than 70 billion in revenue. They also raised their full year guidance as well. Greg, do you trade UNH? It doesn't feel like a company a lot of people do, but it's got an interesting pattern here. What's your read on that one, Greg?
Yeah, well, it's it was setting up for I would have liked to maybe like a little mini cup and handle here, a little pullback to that. I think that's the 20 EMA there. That would have been a perfect setup. But of course, earnings has come along and it's done what you thought it would do. It's it's a breakout trade. That's really what it was. It looked like it was kind of getting into a consolidation there between say 360 and 380, and then you just found yourself, hey, good strong earnings, like you said, they beat expectations, and off it goes. Mm-hmm. Pretty high dollar stock. So I don't know if you're going to be trading it stock wise, but option play I think is available for it, or was available for it.
Here's one of the keys I think you're going to see in earnings season. We had a lot of companies today beat, right? But not a lot of companies gapped and ran. United Health raised their guidance. So if they can give us positive commentary about the future, I think the market's much more likely to reward that. If they just come out and post a number and it's barely above it, like Taiwan Semiconductor did, impressive results. We still love the company. Got to let that perform. We're getting a different price reaction here on UNH with that raised guidance as well. Last one on the earnings front, Tyler, Schwab, SCHW, down a little bit. They beat top and bottom lines. They added a record 3.2 million new clients. An extra 2.4 million new clients in all of 2020. So this record they just added was huge. It just didn't inspire. Narrow beat, didn't raise any guidance, nothing like that. Companies are off a little bit. But again, Tyler, to the earlier point, all within market expectations. I wouldn't overthink that one sitting on the trend. All right. That was a roundup, boys. I got to tell you, I might need to take a little break after that. But two quick corporate items. Then, Greg, we're playing your game. Don't even need much analysis here. Virgin Galactic, the popular space company, SPCE. Richard Branson sold 150 million of the company's stock. This thing has been an absolute beast to trade in the last 3 or 4 months. In one way, it's very difficult to manage. Had the huge parabolic run up when everything was euphoric, gave it all back here, Greg, and now we're breaking below support. You can trend up and you can trend down, apparently, even in these markets. And then lastly, Dell Computer, which has been a pretty interesting company to watch in the last little bit. Huge trending stock here recently. They're going to get rid of some of their debt by spinning off one of the divisions of their company, VMware. Remember when VMware was a public company, Ty, right?
I didn't even know they went away and Dell bought them.
Here they come. They're coming back. Sometime this year, they're going to spin VMware back into the equity market so they can trade on its own. I think both boards of directors appreciate it because Dell's going to pay down some debt and VMware can start making some business relationships that maybe were being prevented by being tied to Dell. So got to be an interesting one.
Interesting. Yeah.
That's the news, guys. Let's play the game here. Greg, we've done this a couple weeks in the last month or so. I think it's kind of fun. We're calling this buy one, hold one, dump one, right?
You betcha.
You're up, my friend.
All right. So just three kind of dividend paying stocks that I look at. We'll just do a little bit of analysis and then you guys can tell me, it's the old marry one, screw one and kill one kind of thing. So similar in that vein. Let's look at AMAT first. So AMAT, technically speaking, flag pattern here, pulling back to support. You start looking at this from a technical, it looks like it's setting up real nicely for an opportunity as far as I'm concerned. From a fundamental standpoint, if you can go to Market Beat there, Tyler, for me, you pull up the website page. Yeah, Market Beat. And if you can throw an AMAT into their search bar there.
Bring it over here in a sec.
And you will see some dividend information there.
All right, I did the search bar and I get articles and more down here.
Okay, let me see. Kind of looking at my screen as well. So yeah, so to the left there where it says related companies, click on AMAT there. Yeah, click on that. and go to dividends, which is about the fourth one over from the bottom there, right there. So looking at some dividend information here, 86 cent or 88 cents annual dividend. So not a huge yield here.
Back off, ad.
Return to page in the bottom. It's one of the most annoying things about FinViz. I finally capitulate with FinViz just to get rid of the ads. Yeah, there you are.
So not the most highest yield ever. Bit of an expensive stock, but pretty solid company overall. You look at the 3-year growth. The payout ratio is what I like. You look at the trailing 12 months. The payout ratio is only 21%. So that means that they do have the ability to bump it up if they want. And their dividend payment is kind of all over the place. It's not as it doesn't flow quite as well as some of the other things that I've looked at. But again, you've got an opportunity from a technical standpoint here. You do have a dividend payout, like I said, not huge, but their payout ratio being so small, you would think that it's not really a big deal to continue paying out their dividend through their earnings there. Okay, so
you like AMAT, okay?
Okay, that's the first one. Let's go to BEP. All right, BEP here looks like we're high basing. Now this is a stock. It's only $43. Renewable Partners. It's a partnership. I think it's what they call them, MLP, I believe they call it. Just kind of high basing here. So you've got a technical opportunity here. If we go to that one there, let's go to dividendinvestor.com. I kind of like the information a little bit better there if you can, Ty.
And while you guys are getting that up, BEP, I don't trade this one much, but they do solar, wind, alternative energy stuff, Greg, I believe, that type of business model. This is what I'm reading.
Correct. Yeah.
Yeah. Okay.
Yeah. Right in the title, the renewables.
Yep.
All right. So let's fire that BEP in the top ticker up a little bit there, Ty, right there. Yep. Yep. Right there. All right, so we're looking at a 2.84% dividend rate yield. They don't give a dividend payout ratio here. That's why I went to market beat with the other one. There's been some challenges with this website recently about getting a payout ratio. But let's scroll down a little bit there, Ty, and let's look at the payout. And if you go down, keep going down. There's lots of information here, but if you keep going down, there you go. So there's your bar graph of the dividend payout. So dividend payout's been paying for a while, kind of all over the board. This is what this type of unit does, is they kind of pay according to how they do. So it's a bit up and down, but as you can see, they've been paying for a while. If you can just scroll back up for me there, Ty, it gives you a time. Go up to the top for me. Yeah, so it says 0 years of dividend increases, consecutive dividend increases here. Been paying dividends since 2011. So not a huge history, but definitely a dividend pair, just under that 3% there. So there's the next one, the last one is BP. So BP here, got earnings coming up, right at a level now where we're looking to break out. Obviously an oil play. Oil's starting to broke out yesterday, starting to move up. BP is one of these companies that it's stayed true to its nature, really. Really kind of a similar price point as it was last year at this time. So if we can go to dividendinvestor.com and take a look at that, Ty. So you got a big old dividend return yield of about 6.11%. This is where this dividend payout ratio, this is where this website falls down. It says 1,254% for dividend payout ratio, which essentially means that they're using 1,254% of their earnings to pay for the dividend. That's actually incorrect. I looked at it on Market Beat, and it's 42% is their dividend payout ratio.
Yeah, so 42% is the ratio. Okay.
Correct. 0 years consecutive increases, paid dividends since 1990. So you've got three different stocks here, all doing different things. Some good, dividend payers. If you scroll down to that bar graph for me there, Ty, you can see here they're kind of all over the place. Had some challenges 2010 there, pulled back. Now, one
Yeah,
of the
they
things
did.
Now, one of the things I want you to note, though, too, they did cut their dividend there. Sometimes what you'll see in this, and it's not this particular example, but sometimes if you see a really wide bar ahead of a very small bar, sometimes what happens is one of those dividend payments get kicked to the new year. So that can offset some of that. But
That's
this
when they had
time,
that oil spill too, right?
yeah. So in this one, they actually cut their dividend there. They've kept it the same on a number of years there. They trimmed it back last year as well. That's where that 1,254% came from. Is obviously the oil stocks were getting beat up pretty bad, and so they did trim it back, and that's how they've got their ratio down to 42%. So buy one, hold one, dump one, go.
Okay. I have thoughts on this. Tyler, you want to go first?
Yeah, you kick it off.
All right. Let's start with AMAT. I love the stock. I love the stock forever. I mean, Matt has been talking about applied materials for the better part of 7 years, I believe, and it's been on our Tackle 25. Give me a long-term chart on this thing. The only thing I'd say is, and it's not going to affect my decision, Greg, but when I think of AMAT, I do not think dividend company. Just start with that. It's actually kind of a nice thing that there's a small dividend that they do pay around that 1%. And they're obviously going to be able to consistently do that because this company makes money. They are just a wonderfully run, fundamentally strong, fundamentally sound company. I have no problem having the dividend, but this one to me is the absolute buy if you don't have it. It's a hold if you already own it. But this one is right there at the top of the list. And Matt, I see you're coming on in here as well. Anything you want to talk about?
Applied materials.
Yeah, we did say applied materials. If you say AMAT three times.
Well, Matt is in AMAT.
That's right.
So all I heard was, "Hey, Matt." That's what I heard. Now, that was a good, come on, dad joke 101 there, buddy.
That was good.
There you go. No, I heard Tim say the dividend. Right now, you don't think dividend for applied materials because it's in a ridiculous vertical growth stage that is post-pandemic related. Typically, applied materials, though, is treated fundamentally driven and not technically driven for the most part.
Mm-hmm.
And so dividend, and one of the reasons why applied materials has been a mainstay for as long as it has, is because of the fundamental nature of applied materials. This growth stage of applied materials is just sexy, and hopefully it never ends. But that dividend is like that cherry on top, though.
It's nice to have it. You're not gonna not cash it. I'll tell you that when the market puts it in your money or in your account, you're going to take the money and reinvest it. No doubt about it.
No, if they want to give you $1.39, take the $1.39.
Of course, of course. So AMAT to me, Greg, is a slam dunk. And I'll just call this one a hold since it should be on people's radar. If you're a Tackle Trading member, Team Tackle here, a Tackle 25 member over the last 7 years, you probably got AMAT right on your radar in your watches. So I'm going to say hold for AMAT. And on that daily chart, Tyler, it's got a nice setup too. I mean, it was on the option report last weekend. The flag is, and the retracement there is developing nicely. Give me next, we'll go in order then, BEP. So it's going to come down to the two here. And when I look at an alternative energy company, somebody just really quickly looking at the pattern is trading somewhat similar to some of the solar stocks. Look at First Solar recently here, Ty. They're not all going to be correlated, but, had the pressure down. Look at some of the other CSIQ, maybe. Okay, so they're under more pressure. So BEP is even holding up better than that and threatening even a potential breakout. I like the line you've drawn there. I'm going to call this one a buy on that breakout confirmation above $44. I like that pattern. I like the potential. I would have no problem if somebody said buy AMAT and hold BEP, but I'm firmly going to be on this one. I'll see if Tyler agrees with me or not. BP, I'm a sell. If I'm playing energy for the dividend, there's other companies I like a little bit more, particularly in the way that I approach the way with my energy stocks like ExxonMobil or Chevron or some of the smaller names. I love writing covered calls against them, right? And I love those option chains a little bit more than I like the BP option chains and just relative performance here. I'm looking at BP, Greg, and let me get the number. Just flash against a couple of different ones here, Tyler. BP has had a performance year to date of 24%. Look at ExxonMobil, 39%, much better trend, right? And ExxonMobil does pay a nice healthy dividend as well. So for me, BP is not good enough to compete against the other energy stocks. I like even 4 dividend cover calls. I'm dumping BP, I'm buying BEP, and I'm holding AMAT. It's been on my radar for the better part of a decade. Tyler, what about you?
Oh man, I was listening intently there. I'm like, okay, surely Tim's going to say something I disagree with. And you did not. You did not. I see zero flaws in that logic, and I think I would agree. I would sell BP. I think, like you said, if you want dividends, you got better choices. Everything has a higher dividend yield in the energy space, so that alone is not a good enough, I think, carrot to get me to go chase after BP. And then AMAT, a hold, yes. We featured that in Trade Masters last night. I do like that breakout of BEP too. So your logic, my friend, is unassailable, and I concur with your picks.
Thank you, my friend. I appreciate that. But here's the part in this segment we've seen the last month or so where Greg rips on our analysis and says you're wrong. Greg, are you on the same page with your 3 here? What are your thoughts?
Yeah, so I like the technical setup in AMAT, but yeah, the dividend's fine to take it. It's the technically speaking, I'd love to buy it, but I'm not holding it as a I'm not holding it as a one of the typical dividend payers that I do, because A, the dividend's not high enough for me. B, it's a more expensive stock as well. So for me, I look at something like Brookfield Partners here. They've got a decent dividend rate. They've got a decent setup here, a little breakout. They've got a decent price point, right? $43. You can, if I'm looking at this versus AMAT, I can get almost 2 to 1, 3 to 1 number of shares, right? So if I'm looking for that dividend, that's where I'm going to go. Now, typically I like to see kind of more steady dividend, but because I understand how these partnerships kind of work, it's matched to performance. So something like Pembina used to run that way as well. A long history of paying dividends, like not missing dividend payments. However, they're not like clockwork where you can expect a certain amount each time. You're going to get those years where it's higher. You're going to get those years where it's lower. But overall, it's pretty solid. So this one here, for me, would be the buy. AMAT would probably be the hold. And again, BP, just because they've cut their dividend, you will see that ExxonMobil and other ones. Now, I like the price point, obviously, of BP. It's a cheaper stock, but it's not giving me what I need from a dividend perspective. When I kind of look at these things, I look at the technical read because that's my timing, but I look at, am I going to hold this thing for a long time? And in the case of BP, I agree with you guys there, which I hate to do, but I agree with you guys. I think there are better choices in the energy space. So dumping BP, holding AMAT, and buying Brookfield. So that's how I see it.
I feel like we're dancing here today, Tyler. Looks like we win, I guess, or we pass. I don't know if there's any winners. We're all winners here, Greg. Greg, thank you, man. That's fun bringing those 3 stocks for our little segment here. Buy one, hold one, dump one. Matt, what did you think of those 3? Anything you want to throw in there?
No, the only thing I wanted to add was I thoroughly enjoyed this segment and thoroughly enjoyed the conversation. Thought the analysis was spot on. Well done. I was just sitting back as a consumer, just truly enjoying the conversation.
Same here, Matt. Like I had the same thought. I was like, I don't have anything to add.
I have nothing to add.
Very cool. Very cool. Well, Mark, I need something for you that you can add to us here today. Help us understand the programming here at Tackle for the rest of the day.
That's why I showed up. Listen, we got a double class night, and Mr. Greg Holmes, who brought us that fine segment, is teaching both of them. Tackle 25 Mastermind Group tonight at 7 p.m. Eastern. And I like the Tackle 25 right before those monthly options expire tomorrow. And I think the timing of that, really, there's some synergy there, right? You got monthly options expiring tomorrow. A lot of individuals with covered calls, they sell monthly options. Some do weekly, right? Some do longer terms, but a lot of individuals, and myself included, we do a lot of monthly options, and those monthly options expire tomorrow. And Greg will be there teaching Tackle 25, our covered call class, Mastermind Group, 7 p.m. Eastern. And following that at 8:30, it's going to be a double dose of cash flow. Greg will be teaching the Cash Flow Club. And do you know what you're talking about tonight in the Cash Flow Club, Greg?
Well, we're gonna do the covered calls, obviously, in the tackle 25. So I think I did a spread class. I think it was last Thursday before. So I think what I'm going to talk about tonight is naked puts, kind of the other part of the boomerang trade. For those covered call kind of systems. So I think I'm going to run down the naked puts part of it and see how we can use that to reduce cost basis and things like that. So,
well, I mean, listen, that is some 101 cash flow class tonight. If you're a pro member, if you're a new trader, it's a good time to sign up for a 15-day free trial on Tackle Trading. Go to the store tab. Lots of cash flow tonight. I'm looking forward to being there, Greg.
And then Tyler, you're on the lounge tomorrow morning, I believe.
Oh yeah, it's gonna be hopping.
Back from vacation, Greg, we put him right to work. There's no doubt about it.
perfect.
We got to get him back in the groove. I'm sure the students will love that, guys. Enjoy the shows tonight, Greg, as always. If you're out there and you are a part of our community pro membership, make sure that you come and attend the Tackle 25 Mastermind group. You can access all of this stuff right on the events page at Tackle Trading. And Tyler, if you can head over to tackletrading.com real quick there, just because always make sure people understand how to find stuff, right? Highlight the Trade Center at the top, then go to the events page, the events calendar. You can access all of our shows here. There's also other points you can access them from under the courses page, under the shows page, but this is one good central location for you to go if you're looking for where to find the show. All right, guys, that's our halftime report today. We're going to wrap it up. Final thoughts, Tyler, on these markets? Anything you want to give the team out there?
I just I don't know. I'm just happy making money. I'm just enjoying this bull market. I feel like if you have a good process, you're getting paid right now. And if you're not getting paid, then it means something's wrong with your process, because these markets are being quite, as we said earlier, just well behaved. That they're doing what I've learned they should do most of the time when you have these trending patterns. And it doesn't always make it easy, but it's nice when you get paid for taking risk and for doing your job. And I feel like that's what the market's doing right now.
Yeah, fantastic. Greg?
More words of Dana Carvey. 1,000 points of light, stay the course. Just really nothing to say. Bullish until further notice. Keep watching the sectors that are strong. Keep getting paid, as Tyler said. You're getting rewarded for doing your work, and you just got to keep on trucking, right? So
I thought the famous words of Dana Carvey were "Party on, Wayne."
Well, he used to do a pretty good George Bush impression. Obviously, I did a very poor one, but
he does a lot of great impressions.
We're going to do famous words of Dana Carvey. Isn't that special?
Isn't that special?
My favorite of all time.
That's good.
That one's good too.
Maddie, any thoughts from you, my friend?
No, good show.
Yeah, had a lot of fun here today, guys. If you're watching the show, you've not done it yet, click subscribe and the bell. We do it each and every day. The markets are live, 12:30 p.m. Eastern Standard Time. We'll be back tomorrow with Coach Frank here for the regular Friday fun day that we do. Frank brings a bunch of charts we look at. Then we'll be putting our scouting reports together right after that.